Mm-hmm. So you came here for a bang, huh? Is that what you came here for? Came here to get a little juicy with me, huh? Little zesty pause. Listen, guys. Hey, welcome back in. Much love, fam. Listen, we're gonna come back in. Everybody's obviously experienced some red all throughout our market. Not only our AMC, which of course we knew that the outer glance of what's going on was going to be used to kind of suppress our play. It seems like whenever there's some general news that happens in the economy, that's also going to somehow spill off in AMC as well. They try to mix it in like it's just the entire market falling. But the entire market is falling today. Those might ask why, which is what we're going to cover here. I believe total malarkey is a relevancy, but obviously we just got to keep this market going up and down. So what do we have today? Some beautiful FUD. The FITCH downgrades the U.S. Credit rating from a AAA to a AA plus, basically saying that there's a higher chance of defaults, which again, like I said, nobody's even fully disagreeing. We already know there's a financial situation, a financial scuffle going on in the backgrounds behind the curtains, which is why they're moving out, trying to get moving into cryptos and putting their fingers over here and there and trying to get people to buy into financial. Oh yeah, I think right now was a good time actually to invest in financial markets. Yeah, I bet you would like me to take out some more bonds. Listen, guys. We all know something's happening in the background. Credit Suisse getting his legs blown off. SVB, banks don't just collapse in the swift market. Like I said, everybody looks at these banks as like totally different things. These are all the same system. This is all the same beast called the global financial market in our centralized banking system. Whether it be Wells Fargo or whether it be Charles Schwab, all of them go hand in foot. Wells Fargo loses half of its base, guess what? Charles Schwab or somebody's got to come and pick up, as they did on these banks where they had to, we all band together and put 50 million in. This is all one system. So we know that that's going on in the background. But I still don't think it's enough to be causing the fear that it is in the market. But like I said, we're going to double tap this video. Got our AMC coverage. I got some new all-time highs review. Some good information on XRP, and then also a hysterical clip at the end, just to put a little joy in, because I know you need a little joy. You need a little prescription of joy today. Today was a bloody one. But without further ado, somebody cue that window fact. Yes, sir. Bring it in. Bring it in. And you know you like it. You know you like it. Bring it in. Bring it in. Bring it in. Bring it in, family. That's what will sound like the Jeopardy crowd in the background. Cue that window fact. All right. Let's get down to it, guys. Without further ado. Yeah.
Well, folks, during the commercial break, yeah, that happened. The Dow Jones Industrials hit another fresh session low, down about 360 points. We're slightly off it now, down 342. And you can see we're seeing a slide in the S&P, down now 1 1/3% or 62 points. The NASDAQ dropping 308 points or 2 full percentage points. This, of course, after Fitch Ratings downgraded the long-term rating for the U.S. and bearish sentiment is rearing its ugly head on Wall Street.
While all that's happening, guys, understand that NASDAQ slid the most, but it's also vastly the highest up. Like I said, that's 2% off of what? A 37% year to date. All right.
Fitch cut the long-term foreign currency issuer default rating for the U.S. From AAA to AA plus, citing, quote, expected fiscal deterioration over the next 3 years. And a lot of this had to do with the partisan divides over spending.
Which we do know. Like I said, guys, we keep screaming it. If you're not investing that plastic money or that paper money that we run around here with, that has got value, but it's really no different than a monopoly game that you play. If you're not putting that in these banger assets, these banger companies, if you're not investing in these cryptos and not financial advice, just telling you how we pulling over here because we getting thoughts and yachts. You can do whatever you want to. I've never been a Toyota Prius type person. I never will be. I'm more of a big body Benz type person. So I'm going to go ahead and take this chance to ride on the generational waves. But there's going to be a change of how money's happening. Everybody, if you're paying more attention, you should be seeing now all of how easy it is and how digitalized everything is with your money. As far as not only spending, tap here. Do you even tap in your pen anymore? Does anybody still swipe their card? I know some of the older heads that watch us probably do, but everybody that's about 40 and under, you probably getting to the point where you think, oh, think. I don't know, might just be me, but hey, there's a massive growing. It's kind of funny how that's all you're going to have to do now to where we're already at is just integrate a different thing that you're banking, which would be whatever cryptocurrencies are rolling, right? Like the man mentioned in the in yesterday's video, there's going to be a bucket or when it's all said and done, there's going to be a basket of globalized cryptos. There's going to be a basket of them. How many? Whether that's 5, 10, 15, 20. There's going to be a basket of globalized cryptos. The things that we know with shit coins and all those things like that, those are not really going to be what's, I don't know if we can't say what it'll be or how it'll be, but obviously we know that there needs to be some type of management in the crypto market. So you can't just have people that come in and create a coin and then make it all disappear, safe moon us and things like that. I don't think that those are going to have a space when this thing ultimately develops out, but being in those things would be hardcore assets, utility tokens, utility coins. That's what's going to carry you to the levy. Like I'm saying, I'm going to have about 100 thoughts. I'm only willing to share about 4. I'm just telling y'all boys do what you got to do.
In Congress. Joining me now live with his first reaction to the Fitch downgrade, Wharton finance professor Jeremy Siegel. Professor, is the downgrade deserved?
No, it's ridiculous, Liz. The Fed can always pay off the debt. The Fed can print the dollars to pay off the promised debt. So there's really no possibility of a default. I mean, I said that, when S&P downgraded in 2011. And by the way, the market reaction.
And you must trust this old head basic guys, which we already know. Nobody should be shocked. Whenever they need that money machine, they can just turn it on. Default what? Hey, even when we like, we're not going to be able to raise the debt ceiling. Hey, raise it. Just press more off. This is why we're moving to a crypto exchange. This is why that money is shifting that way. But up until that shift happens, up until BRICS gets all that moving, up until CBDC is rolling, it don't matter if they printed off $80 trillion right now. Guess what? An American dollar is still the standard. So they can make we happen to be in a situation of having the power of the dollar. Has it been botched? Yes. But I don't see we're not going to default. Default to who? China? What is that entitled? How does that occur? You know what I mean? That's who all your debts owed to anyway. So like I said, hey, but that's a whole nother story. We're not going to go down to that room. Like I said, I'm not trying to get assassinated.
Y'all go do a little research on what we're getting default today. To who? I also said there's no way the government can default on the debt. And in fact, over the next 10 years, we had the lowest interest rates in history, the greatest demand for treasuries in history. It just ain't going to happen.
What do you think of Fitch's timing? They cited this, fighting in Congress between Republicans and Democrats, which is very true. Very true. We got very close to the debt ceiling deadline last time around. Then they lifted it. But, now it's been several months. That was June. It's weird timing, is it not?
It is very unusual timing because there's nothing news about the deficit that got worse. Yes, we have $1.5 trillion deficit, which actually as a percentage of GDP is not as bad as we've had in the last 4 or 5 years. There was really just nothing that seemed to me to suddenly say, hey, this is the time to go for it. Now, there had been rumors several weeks ago that Fitch was on the verge of doing it. Maybe their final meeting and report came through. But, very honestly, we don't have to worry about any default on the.
Well, I'm going to tell you like this. I don't know what this is, but I'm not in that boat. Financial freedom. Can everybody say financial freedom on 3? 1, 2, 3. All right, I was expecting y'all to
that is not going to happen.
Let me push back a little.
This is what we're running from. There's a massive game. There's a massive matrix that you live in day to day. Debt per person, 97,000. The point is that I don't have that debt, so somebody else is taking my debt for me. That's doubled up when somebody's toting $200,000 worth of debt.
A little bit on don't have to worry. The Fed can always print
and
more
this
money.
Isn't good debt like a real estate. These are usually consumer. For these to be taxpayers, debt per person, only 10% of America makes above 100,000. So that means just off the straight number, 90% of this is just consumer debt.
Isn't that
not
the
going
problem,
for
Professor, that we now are looking at the debt clock that is pushing $33 trillion, more than $1 trillion just since we lifted the debt clock, the debt ceiling recently. This is an issue, is it not? At what point does something begin to buckle badly.
Yeah. Well, I'm not saying that, debt doesn't matter and, forget it.
Guys, and I just got to a perplex while I'm watching this roll up here. Go look up the term indentured servitude, right? I don't really like to be dropping these gems off because they said, hey, people start peeping, a little something, you might go missing. But indentured servitude, which the grasp of it is basically where you are at debt of somebody and you have to keep working till you can pay that debt off. Ironically enough, that's what 95% of Americans do and 90% of Americans do and can't pay the debt back, forever have to work, right? But while we're watching this debt number rise up, in the back of my head, I sit there and I say, but that's the goal of what the U.S. wants. The more debt that they can show, that's how many more people are indentured servants to the government. You understand that? Each person that's being born and getting ready to go to college, it's going to tick up another debt on that clock. That debt is really, if we can print the money, there's nothing that can overcome, because there's no other country that has a better economy that you would trust more with the money, right? Because like I said, hey, it's at 32 million, but if this was if China had the power, China was the dollar standard, with the fraud that go on now, it'd be five times this, right? So in the grand scheme, you're like, oh my God, 32 trillion. This is how much indentured servants owe to the government. This is how much power they had. If debt was down at, 100 million, you would have a vastly free country. Similar to how it is over there in Dubai or where the GDP or the minimum people make 150,000, where there really is no just broke, right? That's what that looks like. So while the debt is rising, I know the debt, this is the goal of government. Just FYI, I might just put a little token on y'all boys.
What I'm saying is the government will pay off the debt in dollars. The question is, what will those dollars worth? And if we get a totally out of control deficit, and by the way, I don't see that for a number of years, but long term, the picture does not look good. Then, it's a question of, well, how much inflation are you going to have? How much is the dollars that, the Fed and the Treasury going to pay off? How much are they worth? And how are we going to detect that? How high interest rates will go. If foreign holders and domestic holders say, I don't want the debt, you'll see interest rates go 5, 6, 7, 8%. And at that point, the government's going to have to face it. And until that crisis hits, until people say, gee, this is really going to crush the economy, I think the stalemate in Washington, in Congress, is going to continue.
Well, to that end, we're at 5.25% on interest rates now. That would mean that next year, just to service the debt, the interest is going to be $1 trillion. So why is the U.S. dollar not flagging here? I mean, we've seen a very interesting behavior with the greenback today. In fact, most of the major currencies, except for the yen, are down against the U.S. dollar.
Yeah, and that's the pivot of what I'm saying, people. You can't just scream debt, because as long as we hold the power, right, this debt is irrelevant. Our dollars, even if we can print them, we can go get a debt from another country. The country is glad to lend it out because they're receiving the standard of dollar back. We print it, we send it off. That's why they print and send it off to Ukraine, right? We can mass produce the money. Now, there in the long term, like I said, this is going to come to implosion if we actually get the long term. I'm starting to think that crypto, and this goes to show you how we're not talking about 50 years from now. We're talking about a 5 to 10 year range on crypto bustling, right? Because, and you're seeing how fast move now. They're going to have to move to crypto as the standard of money. That's going to be the unifier. But up until then, which is why I seem like the rich are just trying to run it to the max, like there's no coming back. That would explain why, because they're just going to jump off and go to the next wave. The name of this game is get the money by any means and then put it into an asset or something and get ready for the next phase. That's what the name of this game is.
Well, that's because the interest, I
think the name of the game is.
Interest rates, even with this, potential debt default, are most attractive in the U.S. We have the highest short-term interest rates the highest even long-term interest rates of all the industrialized countries. And so, money is still flowing here. And they do remember what happened in 2011 after that downgrade. Mm-hmm. There was just a temporary reaction, and then the Dow took off after that. So, it certainly is a little temporary ding here in the market. And yes, we do have long-term problems, but, there was just no news that would, say that, oh, my God, things have suddenly gotten worse today as they've been compared to a week ago or a month ago.
Yeah, that was a little strange. And I don't purport to understand or be on the inside of anything that happens at Fitch. There's some very fine, interesting people there. But Larry Summers, the former Treasury Secretary, came out swinging and said that the move was inept and bizarre. That said, we have some very strong data that are right in our rearview mirror. ADP came out this morning. Private payrolls way outsized compared to what was expected. We know the GDP for the second quarter, the first print came out last week. It was better than expected. Durable goods sales, better than expected. What do you expect the Fed will do in September?
Well, and not only that, not only has growth in the first half been better than not only the Fed, but I think any forecaster had forecast. The Atlanta Fed now says that third quarter GDP might be running at nearly 4%, which is really unbelievable. And I think that's what's happened. The bondholders are looking at that strong growth and actually asking themselves, hey, the Fed may not be done raising rates.
Well, what do you think?
This economy is chugging.
What do you think the Fed will do?
At this point, there's so much more data yet to come out, and we'll see. I mean, payrolls, obviously, we've got ADP. It has not been particularly good at forecasting the Friday payroll, so we'll see. It's come out stronger last month than the payrolls. So we have a couple more payrolls, and to see whether we see that slowdown in the economy. I think the Fed is really data dependent. They're going to be looking at, is there a slowdown or not? If there is not, I think it very well could be another quarter-point hike in September.
Yeah, right now I'm looking at Fed funds futures here, just a 17.5% odds of a quarter point.
Yeah, I just don't know. Interest rate is probably around 7-8%. Jerome Powell said he's going to have some patience and that things are getting a little better, but hey, interest gonna get up there. I mean, interest rate's gonna get up there. I've been saying this for the longest.
0.5%.
I just want to see if it actually happens.
There will be a pause. Professor, I got to ask you about a recession.
7-8%.
What do you think the odds are? Obviously, the Federal Reserve says its team no longer sees one at the moment.
Yeah, I've downgraded mine. I see it as I had worried earlier this year, and I put it at 1/2. I'm down to about 1/3 now, and if it happens, it'll be shallow. But it is also dependent that if we do see a slowdown in activity, the Fed has to act quickly. It cannot be shy about lowering rates, just like it has been so hawkish on raising. It has to be two-sided. So if it just says, I'm just going to keep it this high in the face of deteriorating activity, that will increase the chance of a recession. However, we certainly do not see any deteriorating activity so far in the data.
And aside from the fact that the markets are hitting session lows right now with the Dow down about 390 points, putting today and maybe a couple of days of yesterday and last week aside, this bull market seems insatiable at the moment. Isn't that a warning sign, or do you feel that the S&P can hit 5,000 by the end of the year like many gurus on Wall Street are now predicting?
I still think the momentum is upward, despite today's sell-off. The money is still flowing in. There's still a tremendous amount of skeptics. Now, I don't know about whether 5,000 will actually be it, but we're within 5-6% of the all-time high. I can see that all-time high being challenged before we really get some bears moving into the market. I still think the short-term trend is up despite today's sell-off.
Okay, all-time highs will be challenged before the bears come in with their claws to slash. In that case, is there a way where you look at the entire market and whether it's derivatives or puts and calls, where you put at least some type of protection into a portfolio that works best?
Wow. You know, if you're long-term, I think if you're a long-term investor, I'm not scared at these levels. And I don't advocate being a timer on these. I mean, you can always buy puts on the S&P, which give you downside protection, or better yet, sell calls, which give you income. They do cap how high it will go, but give you income in the meantime. That might actually be a better strategy if you really worry about it. But if you're a long-term investor, I would still hold your stock portfolio. We're nowhere near as crazy as we all saw it in.
Guys, just in for the end this, everybody's tripping out and forgetting the timeline of what occurred, especially these long-term growth companies. They were bashed off coming in. So the prices that we were catching them at 100 and 200, where you're seeing them up 200%, this is just them returning back to the levels that they were at about 8 months ago. It's not like it's just running, oh, Tesla's at 1,000. No, Tesla is trading back at where it was trading at 8 months ago. We just so happen to catch the dip if you've been buying in. Now you're catching at these median levels of where it should have been sitting at, getting prepared to take that next leg up and going into uber positive gains, right? But right now, all these tech stock and growth companies were beaten down. And now they just recovered back to those levels that they were actually sitting at, except for the exception of something like Nvidia that are hitting all-time highs. But mass majority of these companies were pushed all the way down and then rose back up.
Continue, in 2000, at the top of the internet bubble, we had a PE of 30. Now we have a PE of 2021, much more reasonable than back then. So long-term holders do not fear. Short-term holders might consider some protection, but I don't see any immediate threats. And in fact, I still think short-term trends are upward.
Short-term trends upward. Professor, a lot of great information coming out of your Wharton brain. Thank you so much. We really appreciate it.
Thank you, Liz.
Miss Lizard. Hey, baby, you know we love you. Listen, when this XRP jump off, I'm going to have a spot for you on that boat. All right, let's put it on back down through, people. Coming on in, let's make this quick and sloppy. All right, AMC, guys, we're sitting up here at $4.83. Obviously, as everybody knows, we took a little bit of a downward trend coming out. Oh, whoa, oh, no. Where did I have that at? I think this is 515. What's that there? I got to go back and find where that came from. Where was that? Oh, yeah, down to 581, right? Basically dealt with what we would call nonsense. It's all algo trading. You see the upward movements, and then of course when it opens up in pre-market, now not coming out of pre-market, but 8:30 to 9:30, that early trading frame, they start to put that whooping down. And of course we know they try to put that whooping down as once we go to our AMC Ortex, we are officially now sitting at 0 shares available again. It seems as though we have finally eaten down through all those shares they brought online, and we should incrementally start to see that cost to borrow raising up, which we are sitting at 170% on the last few shares they borrowed down. But obviously they took the works to push it down to that point again. Like I said, we saw it from this morning. I saw it starting off red and then started trying to do that lift green. I already knew they were going to have to blow that last little dry powder. Putting on through, AMC hits an all-time high. I want to tie all this together so y'all kind of see the perplex of maybe I want to see what occurs tomorrow. I want to see if we end up greening tomorrow. If they're out of shares, again, new all-time high, 29.77%, guys, almost 30% cost to borrow. This is new all-time high, and 30 is going to be a crazy-looking all-time high. Put it on through. Utilization at 81%, cost to borrow 240.31% average, right? We saw them borrow the last few at 170%, but still all of this crazy. I want to see it rise back up to 1,000% again. I want that heat back on there. But nonetheless, no need to fear because AMC is still on the threshold list as of yesterday. Obviously, everybody knows the NYS threshold securities list is released the next day, so we'll know the day if we're still on it. But now we're going on something like 25 days, 24, 25 days on the threshold list, which is absurd. This is insane. 13 days they were supposed to have been forced to close their position. So if anybody needs proof that feds and everybody know what's going on with this, here it is right here. This is the threshold security list. They're notified of this. The fact that this didn't being addressed at all, hey, which we've already known. We've been doing this for 3 years now. But as you know, it's the battle of retail versus institution. And ain't nobody stepping in to save you. The only thing that's going to save you is what's going on right now with that court case. Ms. Zern, if you would, well, actually, like I said, we already like her right here where she's got the delay. I'm not even really going to ask for too much more. I just want to let time decay. Time decay on what they're going to do. What are they going to perform this for oblivion? No. Hey, this is a tighter spot than it was the last couple of times. We're sitting up at no shares available. Short interest rise. We know cost of borrow should be higher, but they're doing a thing that we figured out, which is called stock loan substitution. Go check out my video on that. But basically, they're using options to be able to suppress the cost of borrow and of course, repeat shares and things like that. Hence why they did all that forceful pushing down on Friday or Thursday, where they pushed it right below where all options expired worthless, right? Call options. Well, not all of them, but mass majority of them. All in the quote. If interesting for me would be if I could just sit down next to Ken Griffin and just watch what they're doing. I just want to know. I want to be like, hey, listen. So what are you doing to run this gambit? Because we know this is all algorithm. This is why I spend each day just trying to find a keynote on what the algo's doing or how it's moving. But it's like they're able to program this differently each and every single day because these things are unheard of. There's no shares even available to borrow. Put it on through. Just a quick look at our sweep test to play. Want everybody to stay on them key levels. The chart played off that 250. Like I said, above that 250 is vastly bullish for me. Below, you need to be looking for possibly a drop down to where that next support could be at 220. Is that 225? Let's see here. Where are we at? Yeah, 225. So like I said, we're watching with Tesla, those that invested that, we're watching that keynote of that 250 level. Like I said, guys, all of this, a banger location to be doing your dollar cost average. You heard the old guy say it himself. Time in the market really doesn't work that well. It's called dollar cost averaging. Do you believe that Tesla's are going to be worth more than $250 in the next 5 years? If so, then what are we talking about right now? Not financial advice, but what are we talking about right now? You know what I mean? We're trying to get yachts in thoughts. And not really trying, we're doing it actively now. That's what this is called. Moving along. Quick little vid, guys. Breaking, well, I wouldn't say breaking news, but XRP is getting a lot more aggressive with its movements towards the U.S. markets.
So it's been a couple of weeks now since the judge's ruling in our case, providing clarity that XRP is not a security, which we're very happy about. It gives us a lot of clarity in terms of how Ripple will operate its business going forward. And we are, re-engaging with a lot of the U.S. market. But really, a lot of our growth over the years has been outside of the U.S. I think that's reflective of where there is regulatory clarity, places like the UK, Europe.
This is the president of Ripple.
Singapore, Dubai, in the Middle East. These are jurisdictions that have provided clear frameworks and rules. So that's where we see a lot of growth for our business around payments.
Yeah, and Monica, the UK was singled out as one of the big countries in the Statista report as one of the big hubs for fintech. Is that a country where you're looking to kind of up your investment, particularly as the UK wants to become a crypto hub with specific regulations tailored to crypto companies? Is that where you're looking to put more of your operations going forward?
Absolutely. So our large hub offices, of course, we have a presence in the US, but our presence in London has grown significantly over the years. That office is more than doubled in size, and we have a pretty large footprint in terms of our customer base throughout Europe and the Middle East. Dubai is another key office for us, as well as Singapore. So we've seen a lot of growth through Europe, Middle East, Asia Pacific, And Latin America has been a region that has certainly been heating up for us. We have a key office there in Sao Paulo.
Beautiful, beautiful. And you heard Paulo, that was that place where they just started they did the first transaction. Guys, Ripple is baking and bustling. Ripple is baking and bustling. It's getting real. Quick little ad note that we're going to get to a little funny clip at the end here. Bank of England explores Ripple's potential. A new era of cross-border payments, question mark. Guys, y'all should go check this out. This is on Ethereum News. Bank of England, BOE, has published a paper exploring potential use of Ripple's interledger protocol in synchronized cross-border payments. Guys, this is the real deal. Look at how this thing is expanding quicker than CBDC, Fed now, all of that. Guys, if you don't know, you should know. Listen, I got videos on Uphold, which I use, I use the Valid wallet currently right now as far as holding my XRP. I like it because it's offline. It's a physical storage until you bring it online. So I don't really have to worry about what Lou was talking about, where it's like people are walking through and scanning. You need the Faraday bag, which getting the Faraday bag is a must anyways. But on this type of card, it's not even like an online thing where you can scan it and get that, get that information. So that stuff is written down physically on a metal card, right? So it's not like you can just scan it. The device is transacted when you bring on the pass code and the wallet address, and bring those together on the ballot site, and that's when it actually comes online. You can send it. I will use these as a one-time usage once you do bring it online, just to keep it crispy, but up until that point, this is as secure as it gets. I love the ledger, but this ballot is giving me some more confidence as far as how it's set up. And like I said, guys, go check out the description. I got 5% off. It's $30. There's no excuse to not be having a wallet at this point. Not your keys, not your crypto. I use Uphold. I also even show a video in my crypto playlist of how to buy XRP and then transfer to a cold storage wallet off Uphold. So there's no excuse. There's no excuse. Hey, don't look at me now when I'm on that boat just sweating. Ladies over here, I'm just sweating. Swing that G-string left and right. Listen, I don't want to hear it. You were warned. But hey, listen, now this is hysterical, guys, and we're going to end off on this.
Hey, why are you getting evidence? Why are you getting evidence? I'll put my strap on your bitch ass.
I already knew at the gate that he didn't have a strap, because anybody that does all this out here, they don't have it. They don't have it on.
Why are you getting evidence?
This is what happens if you don't invest your money. You can be in that 9/11 busting down.
You didn't know that, bro. I'm telling you. You didn't know that, bro.
Hey, let me get a switcher though. Can I get a stripper? Hey, can I get a switcher? Let me get a switcher.
Back up, nigga. Back up. Put a gun on this fuck-ass nigga.
Hey, just let him go.
He's talking to the other guy like that's his teammate. This guy's just a customer.
But it's nothing you can do. It's like they're not gonna do nothing. You just have to just claim you have insurance. You have insurance?
What?
Did you have insurance? No, it hurts you. God,
watch how quickly they do 4 and 16.
There's nothing you can do, man, until you call police. Ain't nothing you can do, man, until police come in. Hey, don't. Hey, ain't nothing you can do, man. Don't do that. Don't do that, man. Don't do that.
Got that wrist grab. Yeah!
Okay, brother. Okay.
Whooping his ass down. That's called whooping your ass. That's called whooping your ass.
Dude had to fix his little hat on his head. He was swinging so hard.
That's called whooping your ass.
Hey, listen. Hey, hopefully that gave y'all boys a laugh. Listen, Much love to y'all, much support to y'all, baby. I appreciate y'all boys more than y'all know. Listen, we're growing this channel. We're going to get bigger and better. We're going to have more stage, more equipment, more bangers, more action, more videos. Hey, listen, it's only going to get better. We're only getting stronger. Our money's only getting longer, and we're all on this pathway to financial freedom. You got to remember that, hey, you're one trade away from changing your family's life. You understand me? Does everybody know what's next? Yes, sir!